up around 1131 from the previous trading sessions, put about a trillion back in the market from the trillion that was taken out on Thursday. Your spiders here are trading in between this 565 and this 550 area that we mentioned in our previous video last week. Now, our 9-day EMA is currently kind of right around that area too, at the 565, 566 mark. But obviously depends on how much we consolidate down here and for how many days this 9-day EMA will drop. So that's going to be our first area of concern, depending on if it kind of breaks below this 565 or not. Now, we also are looking at this 550 range for support, and it looks like we're going to confirm that because really below that, it's in the kind of no man's land until you get down here to this $538 range. So a little consolidation in here in this $15 channel. And as we mentioned before, this February top here, and then you go back to January as well, you're only getting $2-3 swings in here each day. Whereas once this volatility kicked in on the tariff news, the Trump administration changes affecting all the markets and everything, this volatility, big pullback. Now you're getting $5 swings in here at the minimum. So big swings in here to take advantage of. And it looks like this $15 channel in here. Basically, we can kind of hit the highs and lows in here more or less every single day. That would not be a problem, right? Or it wouldn't be surprising, I guess, more than anything. So big swings in here. Your consolidation is going to be in this wide channel here that we have to kind of be aware of. But all in all, we're looking at that 565 range for our immediate resistance or our next resistance. And then above that, we're going to mess with this 200 SMA or this upper trend line here that we kind of have matched up. And that's going to be all kind of around there at that 570 level. Really, 575 is kind of the main area that we want to be watching if we break this 565. But we have to see if we respect this trend line in here before we do any of that. If we look at our gold, that might give us a little hint of what could happen here soon in the spiders. So we mentioned we had that big long pullback and we had a green day. Obviously, a red day is going to happen in gold when you have a big green day in the spiders. So you can see in here we had a high in here of 276, low 274, and we closed the day at 275.24. So all in all, we want to see a little bit more of a pullback in here for our gold. We want to go down and touch this 272 level right here. You can see that would be a nice area for a consolidation and a support in here. That would also bring the market back up. But really, we want to kind of break down below this, and we want to come down and hit this lower trend line. If we can pull back quickly, then that means that the market will rise quickly as well. And you can see we're on volume here too. So this big pop in here on the green, and then this red day that we just had on Friday. Pretty nice volume in here, but we're getting into overbought territory, which means that a consolidation to this 272 mark could happen soon. And if not, we could breach that and then head down to this 267 area. So that is good news all around. We're going to check our Qs real quick to see what else the market is telling us in here. And you can see obviously green day in the spiders. You had a green day in the Qs. We're still waiting to see if we can kind of climb back up to this 483 mark. The 9-day EMA is weighing heavy on us in here. But if we can kind of gap up and kind of knock on this tomorrow, hopefully we can breach over it by end of day on your Monday's trading session, then kind of hold and then work our way up to the 590 range. But really that 483 is what we're going to be looking for in here, and still completely oversold on the RSI. A little less volume than we had at the beginning of last week on that green day, but still all in all, you are had a low in here of 473 and a high of 480. So nice $7 swing in there. Last but not least, we're going to check our bonds, see if they're trading with our Qs or they're trading with our gold. And it looks like we had a green day in here. Obviously, we wanted to get more of a pullback with our bonds, but you're always going to have that little bit of positive drift in there, like we always talk about. A little bit of indecision in here on the day. It looks like you had a low 89.86, high of 90.41. And we are green, but it looks like this 9-day EMA is going to be an area of concern if you are trying to be long bonds in here. That's currently trading at 90.49. And if you go as you're looking at your supports, we're really just going to clock in the low in here, the 89.38 of that previous trading session. And then below that, you're going to be looking at this 88.84. So really this $3 range in here, it looks like we might kind of consolidate if we can get the gold to pull back with us as well. So get what we want here is we want to keep on saying green is we want the pullback in gold 272. We want to pull back in TLT, but we want them to hold at 88 84s. We want the Qs to breach that 483 and hold. And then we have to see if our spiders can also go with it right? Go with the Qs and then head up to that 565 range and then hold up there. So all in all, that's what we're looking for. So really good news. If you're bullish on that gold, that red day, it looks like kind of ran out of steam up there, but you are on some volume with that red day. So keep that in mind with the RSI climbing. And really nothing really going on here with TLT, a little indecision. Your RSI is not telling us anything. The volume is not telling us anything. More or less, it's saying, hey, we're going to be in between here and here on the daily chart going forward. And that's going to be that 88 to that $91 range. So again, that is kind of what we're looking at for the bigger market picture here in the short term. If we go back to our S&P, the IV rank in here, it's right at 41. So you still got some good juice in here. And obviously your premiums are going to be quite expensive because you have all this volatility. You have these huge swings in here, right? We're going to trade in a $15 channel in here going forward. So until these swings become less than $5 per day, your options are still going to be pretty expensive. And that's where we get that IV rank of 41. Right around a $5 expected move by Monday. If you go out to Friday's expiration, that's your monthlies. $13 expected move. You go all the way out to April, right around a $26 expected move. So $5 expected move by Monday's close. But again, we could easily 2 times that depending on what everything else does. And we're going to be definitely watching this 565 here and the 550 to see if we stay in that channel. But really, everything is juiced in here, pretty volatile. Be sure to get in and get out because you can't really trust anything in this market currently going forward until we get a confirmation of that 565. Qs confirm that 483. We get a pullback in our GLD, and then TLT kind of tells us, hey, we're going to dip a little bit here. We're going to dip down to that 88s, and we're going to hold there going forward. All right, guys, if you like this video of the market overview, make sure to check us out on all of our social media. We also have Discord servers if you're interested, and you can find all of our socials in the description below.